Olix Network 18, Mission Poshan, Bhavishya Roshan.
Nilesh, I want to now come to the overall market construct. And quite a few things have happened. There seems to be some sign of stability in oil prices. We've just had the by-elections. We also got the latest GST collections, and that number is better than the average we've seen last few months. How do you sum up the broader market context? Do you see a bigger upside for the remainder of this year at all?
So, if I have to summarize very quickly, the upside of the market looks capped because of oil prices. They have remained subdued they have come down a little in last few days, but the future trajectory of oil will impact our market significantly. Second, there is issue related to higher real interest rates and liquidity shortage or liquidity tightness in some portion of economy. 11 out of 21 PSU banks are under PCA, so they are not lending. Rest of the PSU banks are also not as freely lending as before. Interest rates burden is higher on small and medium enterprises, so this is acting as a speed breaker on the growth. And third, and the most important topic which will cast its shadow on the minds of investors, what will be the shape of the government post 2019 general election. These three things are likely to keep our markets upside limited. On the other hand, downside also looks restricted because one, monsoon is good and the economy finally seems to be picking up the momentum. Today we saw the auto numbers. Ashok Leyland sales up 51%, Maruti sales up 26%, Eicher sales up 23%, Bajaj Auto sales up 30%. I mean, this kind of sales growth is unbelievable, and I'm sure what is happening in auto sector will get reflected into steel sector, into battery sector, and so on and so forth. Clearly, the corporate performance is slowly but steadily improving. Most of the managements whom we are meeting today are talking about future with optimism. I met a cement company operating in central India today, and they said, I have no cement left to sold. We are operating near full capacity, and there is so much demand led by rural housing, which is creating this much demand for cement. And I said, I believe rural is under stress, and you are saying that rural housing is having such kind of demand. And he said there has been almost there's almost 100% increase in procurement of wheat in his area, which has resulted into money in the hands of farmers. And the farm loan waiver also has put money in the hands of farmers. Put two things together, they are seeing a tremendous spurt in rural housing, which is reflecting into cement consumption. So underlying economy is strong, the momentum is picking up, but at the same time, we can't ignore oil, real interest rates and liquidity shortages for some portion of the economy and the political equation which will get formed in 2019. So unless until one of the variable changes, I think market will remain range bound.
What happens if we get a rate hike next week from the RBI?
The rate hike next week is more or less factored in, or more than adequately factored in, if I may dare to add. The April Monetary Policy Committee minutes did indicated about a rate hike. If I see the 10-year yield spread vis-a-vis repo, it's almost 186 basis points. So it's not only discounting potential rate hike on June 6th, but also furthermore. The short-term spread between 90-day CP and repo rate also is almost 160 basis points. So my guess is that market has been more than adequately prepared by RBI in terms of communication to expect a rate hike. Whether that happens in next week on June 6th or it happens later on, market has been adequately prepared for it.
Okay, let's see if the RBI chooses to pleasantly surprise then. Well, Nilesh, always good talking to you. Thank you so much for taking out the time and being with us on the show today.